Thank you so much for joining us on the Dwelling Show. I'm your host, Ola Dantes. I've got John Fontes with us today, the legendary John Fontes. How you doing, John?
Hey, how you doing? How you doing, Ola? Man, I'm grateful to be here, and I haven't reached legendary status, man.
You're
Come on.
getting there. No, you're getting there. Honestly, I see your post. You know, you're doing a great job. I just want to say thank you for taking the time out to come on the show.
No, I appreciate that. Thank you for having me.
Yeah, sure. So, John, let's just jump right into it. How did you get started in the real estate investing game? What are you doing currently? Just kind of give us the spiel of your story.
So, how I got started? Oh man, 6 years ago now, I went down the path of trying to figure out what investment strategy would be the best, and I always landed on real estate. Excuse me. So I looked into the stock market. It was just kind of too complicated, right? So I'm not on Wall Street, so I'd be paying a bunch of middlemen. Um, then I looked into real estate, and I actually really honed in when it made sense was when I looked into the value of my home, because we bought a foreclosed home, I fixed it up, and I really appreciated the value. And then the market just started to take off, right? So now my home value is insane. It's the concept of buy low, sell high, but we're not selling high, right? So I looked into that formula, and I said I really understand real estate. So connected with read a lot of books, about 70 books in 1 year at that time. I went through. I finally hit one of my bucket list things where it really started, where I completed the Bible in a year through the Bible Plan program. And then I went through the process of reading the other books, right? So I did a lot of self-help, and then a ton of business books. To this day, I mainly focus on business and self-development books. So from there, I said, you know what? This is the year. We got to do it. I got the education. I just got to go and do it. So I wanted to buy something that I can burn, buy rehab, refinance, and then repeat, right? So buy, rehab, rent, refinance, repeat, right? So I wanted to implement that strategy. And what ended up happening was I got a great opportunity to buy a turnkey property. And we went in, and the day we closed, we had $9,000 in appreciation. So it was a great opportunity, because the owners wanted to move back to their hometown. They thought they moved closer to their home, to their daughter, and they didn't really like it. And they just said, you know what, we're going to move back to the other side of Florida, and we'll sell this house, right? So we ended up coming in and grabbing it at a good deal. We put a renter in there. It's been cash flowing great since. And I said, I don't want to do 100 of these. And my wife agreed, and I just focused on multifamily. Like, it was funny because like a month before we closed on that property, I came across all these multifamily. It was like a shift was happening as it was closing, and that's when it hit me. And I was like, everything that I heard, read about, everybody eventually gets to multifamily. So we dove in. I partnered up with my partners, who are currently my partners to this day. We educated ourselves, bought education, went to conferences, and we partnered up. We mainly focus in Florida, and we partnered up with people in Tennessee to take down 62 units, which we still currently are going through the rehab process with that. It's my favorite project. And then we syndicated 41 in Chattanooga. So that's basically what got me there. And right now, what I currently do is, I'm the host of the Passive Investor Show, and I work with investor relations as well as every form of relationships in our business regarding broker, PM, and investors. So as I connect with the brokers, I hand it off to my team, and we got a system where they know how to qualify the deals before we pass it on to underwriting, and then we go ahead and submit our offers. And then with the PM, once I vet out a great PM for us, that's when I introduce them to the team, and then the team kind of takes that relationship responsibility from me. So it's I get it to a certain point and then I hand it off to the team, and then where all systems go, so we know where everybody helps each other and stuff like that. So I appreciate you asking. That's my story.
Yeah. No, thank you so much for sharing that. I mean, there's a ton of stuff in that. You read almost 70 books, right? Then you got your feet wet with a nice chunky property, and you magically, maybe not magically, but automatically, you saw 9 grand in equity. You're like, oh my goodness, this is really interesting. And then you figure out, well, I have to do this like 100 times to really get to scale and probably really hit your financial goal, your financial freedom, shall I say. And you started thinking like, wait, maybe I can do multiple of this at once, which is what multifamily is essentially. And you also talked about team sport, right? I mean, we just closed on a 160 unit in Houston, Texas. We did that with our partners. It's just by apartment syndication, by its nature, it's just complex, right? And I always say this: even if you're a Saudi prince with gazillions of dollars, you still need a team. You need property management. You need attorneys. You can't do it by yourself, essentially. So I really like that you mentioned the team and how you guys kind of work cohesively together. But let's go back real quickly, right? When you spoke to your wife, right? That's I had the same issue when I was starting now. About getting into real estate, or even about changing your strategy from buying a turnkey to buying multifamily. How did she take that? Because I think our spouses are very, very important in our real estate investing journey.
Great question. So with my wife, the value came with me seeing, once I realized the value in our home and how that worked with equity, that was I was easily able to explain that to her. So my motto is, I have an IT background, and if I talk tech to someone, they're not going to understand it, right? But what I do is I talk to them as I would talk to a fifth grader, third grader, right? So they can understand it. And then I transition that into the tech language, right? So one, it shows two things. It shows that you know what you're talking about, and it shows exactly that you really, really researched it. And my wife knows me that basically she hates if we go shop for a TV, right? So she's like, I'm not going with you because you do so much research that it's almost like you should be working there instead of them. So why do you put them through that? I say,
I'm
because
like laughing at the background, yeah.
yeah, because I want to know if they're telling me exactly what I researched, and if they're the expert. So if they can teach me something new, I feel good about that. So going back to that is, when I was able to explain that to her, it made sense to her. And then the fact that this opportunity came about and it was turnkey and it was ready, it was something that she felt comfortable in, right? So it's all about communication and comfort, because finances is an important subject in all relationships. And if not everybody's not on board, it could, really cause stress in the relationship. And I just want, I want comfort in everything. So
Right.
that's what's important for me.
Right. Yeah. Another thing you mentioned, you've read a ton of books. So in terms of, setting your fundamentals, that was pretty strong. You kind of had an idea, or maybe more than an idea, in terms of what you wanted to do in real estate. And reading so many books, especially the Bible, my favorite all time. What I want to ask you is, if somebody's listening to this conversation and going, oh my goodness, like, I don't know how to get started. Maybe I don't have money, or I don't have time, or, what would you say to that person just in general?
So basically we're talking to the busy professional, right? The busy professional doesn't really want to know everything that the operator needs to do, but they need to know certain things, right? So find out the baseline of what their job is, because if you're going to invest passively, right? So let's just say we're talking to the busy professional that's going to invest passively in a multifamily opportunity. And that's what I focus in on. What I tell them is, I say, figure out what your criteria is, and then find out who meets that. And when you do that, reach out to them and form a relationship. It could take a year, right? But you don't have to go through all these conferences and all these as a passive investor, all the research you can know about real estate just by simply looking at are you renting, right? Figure out how that works for your landlord, right? Just reverse engineer it or something. Or did you buy a home? Figure out the equity, how that works. And then figure out how it works as a passive investor. And then find the operator that suits you. So that's one way. And another way is if you're going to be active on the active side, then I would say devour everything. Go to bigger pockets. Even as a passive investor, go to bigger pockets. Research there. There's a lot of information there. Go to blogs, read blogs, but find the best use of your time. So my best use of the time is not reading lengthy blogs, but books I can consume while driving, right? Audio.com is really helpful. And you mentioned the amount of books that I've read. I just compiled a list. There's about 106 books on there, and that's only books that I consumed while driving on my Audible. It's not any of my Kindle books. I haven't really gone down my Kindle books because I read at night as well before I go to sleep. So I got a process. So if I listen to a book and I like it, and if I really really like it, I'll buy the physical book, and then from there then there's my favorite book that I have that no matter what, it's called The Third Door. It is the book that I hand out to my little cousins if they graduate, if someone achieves something in life. I just think it's so eye-opening because it's helped me so much, and I find that if I can pass that on and share value with someone, what the process is in that book is just picture, and I love explaining this. So picture getting into a club, and there's the line, right? And it's wrapped all the way down the street. You're either gonna wait in that line, or you're gonna drive up VIP and get it, right? So, hey, Ola, how you doing? Go ahead, you're in, right? Then there's the third door, and this is the door that entrepreneurs use. It's the one that they go in the back alley, jump through the window, walk through the kitchen, and then walk through the club. I'm in. That's the third door, and that's why I love that. And it's about figuring out the process. So that's my favorite book, and that's why I love handing it to younger little cousins and friends and family members and stuff like that.
Wow, that's fascinating. That's like really, really. You kind of answered one of the quick round questions. I'm still going to ask you anyways. But yeah, that's fascinating. So, I mean, you talked about your very first deal other than your primary resident, which was the turnkey deal, and you talked about the equity you guys made out of that. What about the kind of bigger stuff, right? Let's talk about the 62 unit, for example. How did you guys, find that deal, and how did you guys fund that deal?
Like I said, that was brought to us by a partnership. So the biggest thing was not to syndicate that deal, because the 62 unit is a dead asset, and it's my favorite asset to talk about. And what I mean by dead asset, it means there's no tenants, no cash flow, no nothing. We're renovating everything right now. Building 1, I feel like I've been talking about that forever, is just about to come online, and we're moving to building 3, and then we're moving to building 2. There's a reason why we're moving in that order, is because we're taking care of all the 1 bedrooms first. The 2 bedrooms will take a longer time. So once we get to break even, we'll be great. That'll be the best part of it, is getting it back to break even. So there was a mass exodus. I talked about this on another podcast as well. So what happened was we had to repair the decks. They weren't up to code. And we emptied out building 1. And as we did that, building 2 and building 3 caught wind, and everybody said, I'm out of here, didn't pay and all that. So we had to figure that out on the fly. And it's just kind of like the way it is. And it's been empty since. And we've been able to kind of just speed through the process now, right? So there's no tenants on the ground and stuff. So, but here's the thing. Our PM has already marketed our showroom, and we already have 8 units ready to go by the end of the month, or the building's going to be up by the end of the month. But we have very, very a good amount of interest going into it right now, because it's going to be a new product. It's really, really going to look really nice. I mean, I've yet to release the video on it, because I just want to get to that building being complete first, right? So I got some pictures in the bag ready to go that I want to release, but I don't want to share it too soon. So I don't want to get ahead of ourselves, but the units are looking really good for a C property, a C- property that we're turning into a true C+ property. And it's got it's got me really excited because there's been a lot of learning experiences on that. So what I would do in general going forward, if I was to ever take over something like that, where I know that I'm going to turn over all the units, is I would uh, raise a little bit more capital. And what we did was we JV'd that, right? So we raised enough, and then we're gonna, we went in with a bridge loan, and a bridge loan provides some of the funding for rehab as well. So upon completion of certain things, we pull draws to the bridge loan, and they reimburse us, and then we rock and roll, rinse and repeat through that cycle. So what I would do going into another project like that, and if I was to syndicate that deal, I would raise a little bit more than what we did just to have an extra cushion, because to account for a mass exodus that we just went through. So that's why I really love this project, because I learned how to refine that. Yeah.
I bet. Yeah. Talk about the third door, right? Like, this is fascinating. Yeah. Yeah. Talk about this is really, really interesting. And, that's the thing though, because, investors might not understand this part of the business, but really I see ourselves as syndicators, as problem solvers, right? You're not going to go buy a class A building in a class plus A area that is beautiful and is just, was built last year. You're not going to make any money, right? You want to buy those kind of assets, that kind of diamonds in the rough, where you can kind of, bring up to code, bring up to market rent, and then, really make a ton of money for your investors. That's kind of what this game is about, right? So I really appreciate you sharing that with us. So we're definitely dwelling into the quick rounds. These are going to be quick questions, quick answers. You ready, sir?
Let's do it.
All right. First question. What makes you, John, unique? What is that differentiating factor that separates you from the next guy or the next girl?
Well, quickly, I like to find the best way I can streamline, whether it's information systems or processes, that'll help not only me, my business, or just others in general. So I think I look for not the quick path, but the quickest way to consume.
I love that. Yeah, I love that. So needed in our data tsunami world, right? So
Absolutely.
yeah. You've answered this, but you can maybe touch on it real quickly. What's the favorite book you read, and what was the one thing you picked up from that book? Oh, actually, no. This let me change that.
Let's do it. Change it.
Yeah. Because you've answered this. So, what was the last book that you read, and what was the one thing you picked up from that book?
The last book I read, the last three, was The Real Crash, about the economy coming up. There was one more. Right now I'm currently reading Traction. So
okay, great book.
Yeah.
Yeah. All right. Final question. Obviously, you've got your beautiful family, you got your wife, you've got your business. Yeah. You've got all this. You've got the podcast. I mean, I know how hard it is to run a podcast. So you've done all these other things. What do you do for fun?
I referee basketball games. I truly love basketball, and I love watching my son play. So he's 9 years old, and he's taken it just on his own. I haven't forced it into. I didn't put a ball in his crib or anything. I just wanted it to be natural with him. I wanted to. Who knows if he picked soccer, baseball, whatever. I just wanted it to be something he picked, and I truly love watching him. And my daughter's starting to do other things and pick her lane too. So I love watching my family grow, and I love reffing basketball games. And that's what I do as well. So I love it.
Nice. Thank you so much for sharing that. Yeah, thank you so much. So if there's a dual listener listening in our conversation, thinking, "Oh my goodness, I like this John guy, and I want to get connected with you," or maybe there's somewhere in the Massachusetts area or anywhere in the country, frankly, what's the best place people can reach out and get connected with you?
There's a few places you can connect with me at. If you want to go to johnfortes.com, that'll bring you to the podcast. If you want to go to cfigwealth.com, that's the business. So any way you go through that, you can get me.
Thank you so much, John. Really had a great time. Thank you so much for sharing that deal. Thank you for sharing the great book. I have to go read that now, of course. I really appreciate you. Thank you so much.
I appreciate you. Thank you for having me on, Ola. Thank you.